Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today is Wednesday. We are in the last week of August, going into Labor Day weekend in a somewhat oversold market with a ton of headlines out there. So what was today all about? Everyone's like, red dog, was this the bottom? You know what? Who knows? Okay, this is the end of August. We have still a lot of scenarios to deal with, whether it's from Syria to tapering to the next Fed chairman to whatever it is everyone's obsessing about. You know, you come in today, you're a trader on an intermediate and active time frame, you have to figure out how tactically you can make money. So coming in today, we talked in the morning call about how to perhaps get in for some type of bounce. The type of bounce it's going to be, we don't know. All you know is if you do the right tactic, you could be pleasantly surprised and make a decent amount of money in it, or it's just a chip chop type of trade, and you figure out what's next as the process continues. And overall, right now we're in a corrective process. Lots of things have broken some key intermediate trends and moving averages, but today some things gave you opportunity if you used the red dog reversal tactic. And I'm sorry, I feel like this tactic just keeps coming up, and I hate to keep saying my name. It sounds all narcissistic and everything, but we've had two pretty important ones for short-term direction this week that if you honored them, you were able to maneuver and get yourself safe and make some extra money. And that's what we're here to do, right? Add to your P&L, keep you safe, and keep you moving with some quick feet. And you look here at the chart of the SPX, you will see, first things first, just to talk about the head and shoulders top pattern, which we saw develop, which you could have maneuvered, and it looks like a head and shoulders top, and that's what it was. And then it broke below this neckline, resolved to the downside. Then it created some downside resolution all the way down to where we finally hit this little bottom here, right? This little bottom here. Then all of a sudden you had your day one, not a powerful day one, but somewhat engulfing, gave you that move into Monday. And then Monday, what took place? That was your outside day where we traded through 1664 in reverse. So if you were playing for some kind of oversold bounce, that was your exit sign. If you actually sneezed or went to the bathroom, you might have missed it. Anyway, closing the lows. Yesterday, you had downside follow through. And then what happened today? Today, this morning, opened up 3 handles or so. Quickly, some pressure came in, pushed the market below 1629. And when it did so, we were talking on the radio how certain things weren't pulling back. Some of the go-to stocks, whether it was Facebook, whether it was Apple, whether it was, ExxonMobil and Chevron, which haven't been go-to stocks that were strong, that were, heavily weighted in the S&P, whatever, didn't go down, gave us the right execution. So the way this strategy unfolds is 1629 is yesterday's low. Today we went to 1627. All right, so hear me out here. So I know this happened quick, and I know it was only 2 handles, and everyone would have loved to flash down this and that. You never get exactly what you want. But if you executed on the strategy, and if you were following us on the virtual trading floor, you would have seen that we did get long the spiders into that strategy. So let's take it to the spiders, because that's what I was trading this morning. So you go to the spiders right here. Look at this, 15 cents. That's what it was. The low here yesterday, 163.21. Today's low, 163.05. 16 cents risk, and it went as high as 164.49. So with that said, not a blockbuster trade. If you want to draw the lines here, this too was your head and shoulders top, left shoulder, head, right shoulder, neckline, outside day right here, boom, reversal. You had a nice little trade here. And the trade, it took some time to develop. If you missed it quickly, you could have bought it a little bit later. I did sell some around 163.30-ish, and traded a little bit into the close. Didn't really tweet about it or talk about it, but ultimately, who knows? Maybe we get a few more days here, and it tries to fill a little bit of this gap, and then still stays below this area, because some people out there in tech land or technical analysis land are talking about a new head and shoulders pattern, but a bigger one. They're saying, here's your left shoulder, here's your head, and here is your right shoulder. That will take time to develop. So, with that said, these things do take time. So maybe it bounces up a little bit into tomorrow, the end of the quarter. Who knows? But it still has some room. Look how long it took for this to develop and then the head to develop. So this is too quick, but we shall see. For right now, all I know is that this was a decent trade today. You go to your 5-minute chart, you could see that you did have this move off the low. It happened really quick. So this was the trade through the open, went down below 163.20, came up, retested it. So even if you missed this first move, you could have been a buy around 163.40, and then from there, trended up for most of the afternoon until it hit the moving average here, followed the 8-day short term, and right when it reversed and broke this, that's when I got out of that trade because I was following the trend, trim and trail, stay with it. You never know how long it's going to go until it changes. So with that said, decent trade on an August summer day. So you go to some of the stocks that we track, go to Apple, it quickly had that red dog reversal, nothing so extreme, okay? It went, through this real quickly, which was 486.30, went as low as only 486, so about 30 cents, went as high as 490, what was that, 495.80, and then wound up closing at, I think it closed a little bit better than 490.90, but anyway, decent trade here, broke that 498 the prior day, so we'll see what it does here if it tries to, build a new little upper channel or if it needs more corrective activity. But ultimately, acting really great ever since this earnings move, which we talked about, and also after it reclaimed the 100-day right there. Facebook also is down pre-market and then engulfed it real quick. Still looking really good. We talked about it off the charts. If we were to get down to the prior breakout, look to buy it. Didn't really give you that play. Ultimately, though, flagging again, looking very strong, nice leadership. Tesla was a little weaker today, but still fine. You want to quickly just put it up. Hold on, T. There you go. Whoa, like I never put this stock up before. Anyway, here it is, still holding above, 160 and change, acting very strong. We'll see how that continues. That trend continues strong. Baidu has been a stronger stock. This is a really nice red dog reversal. Lots of guys were looking at a pre-market when it was negative. It wound up trading below the prior day low here of 134.70 to 133.65, a dollar risk that wound up being almost a $3 to $4 gain, and now it still looks like it's showing some leadership channeling after a really nice move since earnings. I think the Chinese indices are acting a little bit better than some of the other world indices right now, especially the Shanghai, after being weaker from the majority of the year. Some banks tried to reverse, Citigroup. You look at some of these, again, just a day in the life, open negative, went positive. You had to take some of it off, maybe trailing some to see if it could trigger a little bit higher, but the banks still, not the best place to be, trying to get a low. Goldman was like the last to rally, and it's still, a little doji here, so maybe we'll see what happens tomorrow if it tries to get above this little high here. We have a new point of reference, still above this June pivot, but it's been acting weaker than most banks. You look at the, gold. I did go long puts on the close yesterday. Still have them. It seems like it's getting tired. I don't know. Maybe it's just wearing people out, baiting in some shorts. I don't love it. That's why I'm not short GLDs, but I do think after a move from this red dog reversal 115 up to here, it's worthy of at least selling some strength. If you're long, doesn't necessarily make it an A+ short, but two gap ups, met red, maybe it tags the 8-day. If it tags the 8-day, we make some money on the 136 puts. We shall see. It could, if it wants to, continue to go. You do have the 200-day moving average, depending which one you use, all the way up here, and there's still lots of course people talking about being long gold. For me, this was your calculated long. Here was a better one. Here was even another one, and now it's taking time. If it were to hold this, though, and go sideways another day or so, it's going to be wrong, and the premium is going to be done, and your puts will be worthless, but at least your risk is premium paid. There you go. Today, early on, I know I've been trying to catch a bounce in XOM. Finally, guys on the floor caught it, tweeted about it early when it had early strength. I did not catch this well at all. I tried it in here and got a little messed up while I was away on vacation. Here's your strong day. Now it seems as if it can go higher, but it's hard after the amount that this just went up. CVX, which has been stronger, really strong day. Look at the size and the potency of this move. It's been a laggard type trade, but with oil going higher, with all the unrest in the Mideast, boom, So that actually went before XOM. So with CVX going, some traders who are looking at the group caught XOM. Congratulations if that's you. And really, there's not really that much to say except for there have been some clues to take risk off, from the head and shoulders top to the outside day Monday. Today, if you came in flat and you were looking to be tactical, lots of little red dog reversals for cash flow. If you went home flat overnight, not a bad thing to do. If you went home long, some stocks that you own from lower, from those pivot points, and you're in the money somewhat and you booked some trades, not also a bad thing to do. With we could get a few more choppy upside days like this. I think they talked about military involvement not till after the weekend. But first it looked like it was going to be Thursday, but now it seems as if the inspectors need a few more days. So there is some room for a little bit more, push to the upside into the end of the month. So lots of little things to do. And that's, I think, what I'm emphasizing here, little things to do. The jury's out on whether or not yesterday's low or today's low is the low. I would say high probability it's not. But if you traded the tactics today and booked some cash flow, they can't take it away from you. And if you're looking to stay a little bit long and you're okay with the geopolitical risk overnight, just make sure it's small and see if we get some continuation. If we don't, we'll continue to be tactical until the market tells us otherwise. So with that said, last week before Labor Day, hopefully everyone's enjoying this summer. We had a really nice July, great earnings season, lots of action, even tactical shorts that guys in the community were able to take advantage of, as those patterns did show us how to navigate. And you can time this market as long as you can continue to educate yourself. Scott Redler, T3 Live, the recap. See you at the morning call. Have a great night.